Hello, Jorge. I would like to start by, could you tell us a little bit about yourself and your track record?
Sure. I am a Peruvian national, born and raised in Lima. I come from a mining family that has been in the business for 4 generations, and we are four brothers, and out of the four, three are in the industry. Yeah. Uh, I co-founded Fortuna with two associates back in 2004. I am a mining and geological engineer, working in the industry all my life. And again, Fortuna was founded in 2004, 2005, and it's been quite a journey over the years. Back in the day, it was three associates, big ideas, and little money. And today, we are an organization operating in two continents, employing 5,500 people, uh, generating revenues of close to $1 billion a year. And we're, I believe, established ourselves as a force in mining in the space of mid-sized producers. Yeah, it's been quite a journey.
Welcome, Paul. Could you start by introducing yourself to viewers and tell them about your career?
Yeah, my name is Paul Weedon. I'm the Senior Vice President of Exploration for Fortuna. I've worked about half of my career in Australasia, and then the other half of my career has been dominated by Africa for 20 years now, and a few more years in and out of Latin America and elsewhere around the world. So run the full spectrum from generative exploration through to corporate geology, M&A, and production. So yeah, fairly broad range there.
What do you consider to be your greatest achievements?
There's a couple. The main one for me has been working in West Africa and developing up the national teams to the point where I run essentially completely national teams in the countries we operate in, and over the years folks that I've worked with, nationals that I've worked with, move on to then take up expatriate roles elsewhere. So clearly they're able and capable of taking on roles that traditionally people say, oh no, we can't do that. But I've seen a lot of development, and I'm really proud of those guys.
The past quarter, Q3, was a pivotal quarter for Fortuna. Could you summarize the third quarter for us?
Yes, the third quarter is an inflection point for the company. It's been 2 years of hard work since we expanded our business to West Africa. That expansion took place in mid-2021 when we closed the Roxgold acquisition. And the Seguela project came to us through that acquisition, right? So since then, we launched the construction of this, which is our flagship mine. And after a successful construction on time, on budget, the third quarter was the first time we consolidate results incorporating Seguela. Gold equivalent production, that's a gold silver equivalent production of 128,000 ounces of gold. That's an increase of 38%, Jasper, compared to the previous quarter. When we look at our revenue, $243 million in the quarter, that's an increase of 53% compared to the previous quarter. If we look at our net cash from operating activities at $106 million. But more importantly, free cash flow from operations was $70.5 million. That's 70.5 million, which is a significant increase compared to the $9.5 million in free cash flow from operations we delivered in the previous quarter, right? Or net income at $27.5 million, or 9 cents per share, beat the analyst's consensus by a wide margin. Analyst consensus was in the range of 6-7 cents per share. We came in at 9. And if we make adjustments for one-time charges, the earnings per share increased to 10 cents. So it was an important quarter for us, one we have celebrated after so much we have put into it. And I think we have positioned the company well to deliver value to our shareholders today and into the future.
Thank you, Jorge. So with that, I would like to move right into your flagship project or flagship mine, Seguela. So the mill is already running above nameplate capacity of 3,750 tons per day. What could we expect it? What do you expect it will run at for the next 12 months?
In the third quarter, at Seguela, we produced 31,490 ounces. But it was still a ramp-up quarter for us. What's important to note is that we exited the month of September, last month of the quarter, already achieving 13% throughput above nameplate capacity. So what you should expect for the fourth quarter, and it's something that we have been, telegraphing through our news releases, is that you should expect a quarter with higher throughput at a more stable rate, right? The fourth quarter is not a ramp-up quarter anymore. We're already operating at a stable rate of production and at a higher throughput rate as well. We exited September, as I said, doing 13% above nameplate capacity, and I can advance to you that today we're running the processing plant at closer to 20% above nameplate capacity. So performance has been excellent. The team at Seguela is doing a superb job, and we should see the benefit of that in the fourth quarter and onwards, right? What we should expect is, Seguela continuing to power our results. Another important thing I want to highlight is that we are benefiting in these early months of production from positive grade reconciliation. What that means is that we're finding more gold than our geologic estimates indicated, and that's about 10% more gold. We have done what we call short-term planning adjustments for the end of, for the second half of this year, now adjusting for those higher grades, but we haven't translated that yet to the global resource, and we believe we need more information for that, but for now we're harvesting more gold.
Excellent. I have a lot of follow-up questions to that, but I guess we could start by, as I said, you're almost at 20% above nameplate capacity, and the usual saying is that you can run it at 15%, but above that it gets difficult. So, what did you do to debottleneck, or what have you debottlenecked?
We have not done any debottlenecking yet. It's just running the process, achieving stability in the process, balancing the plant, and I would say that we have not really engaged in any meaningful debottlenecking exercise, not at all. So, when you design, you always make conservative assumptions, and we're being able to perform and capture some of that spare capacity built in the design, no?
In the Q3, you have had a very high mining rate. You mined almost 5,500 tons per day. Do you think that you comfortably, if you had a processing capacity, could sustain mining rates above, say, 4,500 tons per day, or could you add some to that?
Yes. The answer is yes, no? We have versatility in the mining because we have several deposits, so we don't run into bottlenecking. It's just managing that complexity. But before we start thinking about big expansions, or what we see for us at Seguela is doing it methodically, step by step. It's very early, and we're doing very well. So, don't lose our heads, keep a methodical approach, go step by step. We want to first learn the limits of the infrastructure we have. We're in that process, and it's going really well, as I'm telling you. So once we are comfortable that we know the plant now in operation quite well, we're in complete command of the process, and have pushed the infrastructure to its limits, then we can make a pause and think about with numbers what next in terms of an expansion, right? In the feasibility study, we had an expansion for year 3, taking the mill from 1.25 million tons a year to 1.5. It could very well be that we skip that expansion because we're already achieving it, running at 20-25% above nameplate, right? So we're in a very good position. We're really in a very good and a strong position to continue harvesting value at Seguela.
If we stay at Seguela, you had a 93% recovery rate in Seguela, which is very good for a ramp-up quarter. In the feasibility study, I think you're assuming 94.5% recovery rate. By fine-tuning in the processing, what level do you think that you could achieve in terms of recovery rates?
We are already very early in the game. As I said, we are already at a level where, you're not going to get big gains. It's small gains, optimizations. You start fighting for that half a percentage in recovery. How do you achieve that? Better sizing with the cyclones, fine tuning your cyclones. Achieving more efficiency in your thickener, so you can provide the leach tanks with higher residence times. It's just balancing the mill and making sure that everything is operating efficiently and getting the maximum out of every component of the process, right? Quality of water, things like that.
The starter pit was the antenna pit. Are you currently only mining at antenna pit?
We're mining at antenna pit, and this month of December, we are going to start conducting mining at Ancien, which is going to start contributing production late in this year and into next.
And how are we looking for Kola, which is your other very high grade pit?
We are quite advanced, probably finishing by now with the infill drilling in preparation for mining. So we do infill drilling ahead of production so we can have good grade control. That's key. So, we're doing all that good work ahead. So by the time we get there with the mining, we can deliver. So all of that work is taking place. Something I would say, for example, to add color to your audience on with respect to Seguela, is we delivered in the quarter really an industry low AISC of $788, and cash cost was below $400. Right? We are benefiting from the fact that in the start of mining, stripping is low, haulage distances are short. So we've been, also communicating that, we celebrated those low costs in the third quarter, and I do expect we'll continue to see low costs. But costs will start gravitating towards our guidance. We have guided for this mine in this year $880 to $1,080 AISC. And, as we advance with pit operations at Antenna, as we start incorporating Ancien into the production, stripping will be higher and haulage distances will be longer. So you should expect to see that AISC gravitating towards $1,900. But well within our plans, but certainly, it's been a great start for the mine. We couldn't ask for better.
Something a little bit confounding is that, and you also mentioned that at the beginning of the call, that the antenna pit has a reserve grade of a little bit above 2 grams per ton, and you mined 3.83 grams per ton this quarter. Do you have any idea why do you think we could expect similar grades, or at least significantly above reserve grade for the antenna pit?
As I also said, it's been a pleasant surprise, right? It's been a pleasant surprise. But we are not extrapolating those higher grades to the entire antenna model. We're being cautious. So we need more information before we do that. But so far, so good, right? We did infill drilling for the first 6 months of production, which is H2 2023, where we are right now. And the outcome of that work was 10% more ounces on the back of higher grades. No, so that's always very positive to see. But we're not rushing to make an extrapolation of that to the entire deposit. We'll be careful with that. No, so. But again, this is very good news. It's very positive, and we're paying a lot of attention to that and doing the work to see if this information, further information that we generate, further supports an upgrades in the model. Right, that's something that's still to be seen.
As we said, your two highest grade deposits are the Ancien and Koula pits. How much of the ore production should come from those pits in next year?
Those pits, antenna remains an anchor to production for a few years, right? And the others start contributing at a smaller rate, about 30% of production combined, probably 40% of production combined. But antenna is an anchor to production for the 2024 and into 2025.
The biggest threat to mining investors or fear is compressed margins through inflation. That hasn't really materialized with Seguela, which is very good. But now we're talking on a per ton basis. What inflationary pressures are you seeing in Cote d'Ivoire?
What we've seen in West Africa, I mean, in 2021, we did see significant inflationary pressures. And I remind you that we increased the construction budget for Seguela from what was in the original feasibility study published in early 2021 to what we finally declared as capex when we made the construction decision in September of the same year. We increased the construction budget by $24 million, right? And that was all on the account of inflation, basically, right? But I can tell you that it is the first time in the third quarter when we do our management review and we look at cost drivers across the different mines in the different jurisdictions. It is the first time we see inflationary pressures on consumables abating, below or at or below our estimates for the year, right? And compared to the previous year abating. So I would say that on consumables, diesel, steel, cement, cyanide, explosives, inflationary pressures, it is our observation that they're abating.
On labor, what are you seeing there?
Also, less pressure. I would say we're looking into 2024, and in the jurisdictions where we are working in, for example, in Peru, we've been seeing 4 or 5% inflation, which translates to wages eventually, right? Minimum wage adjustments to keep our workforce in line with inflation. But I've been through a review, and for example, in Peru, inflation expectations are back to 2.5% to 3%. And that's in line with what we see on wages across the business. Inflationary pressures between 2.5% and 4%, depending on where you see more pressure. So nothing dramatic.
So with that, I would like to ask my final question regarding Seguela, and that is, how do you envision Seguela being developed in the 2 coming years?
I would like to see an expansion case for Seguela on the back of exploration success. Today, the life of mine of Seguela is close to a decade, and I believe we have a good chance to find more, bring more ounces, and on the back of that, develop a case for an expansion, but an expansion that would be beyond what we are already capturing as an expansion, right? The plant is not going to be running by year end at the design capacity. It's going to be running 20% above that, 30% above that, perhaps, right? So I would say it will be a second expansion, no? So a case for a second expansion. So perhaps getting closer to 1.8 million tons a year or 2 million tons a year. That is an expectation and would have to be backed by exploration success, and we're putting the money. A big theme for us is our exploration budgets, no? Or we, for us, Jasper, there is a very topical discussion now that we have this cash flow inflection point that we talked at the beginning of the interview, which is, okay, you're generating all this cash. Now, what do we do with that? So one is bring down our debt. We're not a highly debt leveraged company. Our net debt to EBITDA is 0.5, no? So it's very low. But even so, we want to put together a fortress balance sheet. We believe that's how a mining company should be run. So we're going to continue to lower down debt aggressively. We paid $40 million in the third quarter on the credit facility. You're likely going to see us paying a similar amount in the fourth quarter, right? The second priority is continuing to ensure that our exploration projects remain well funded. We've been investing in mineral exploration at our properties at around $25 to $30 million every year. And into 2024, you should expect to see that number increasing probably closer to $40 million, right? We have a lot of opportunities in the portfolio, and that's the cheapest value we can deliver our shareholders, discovery in the portfolio, no? So we continue working on that. And last but not least, we will remain alert to opportunities, just like the one we captured with the Chesser acquisition, right? Which is a very exciting strategic fit to our portfolio, as it's an advanced exploration project that within 12, 18 months could be feeding or development pipeline, right? So in 2 years, 18 months, you can have a case for a Seguela expansion and Diamba Sud moving into a development project, no? That's an expectation, of course. That's what we're working for.
You will add Sunbird. I mean, it's already in the current MRE, but you will add it in the new reserve and resource statement in a couple of months. And what could we expect? And will most of the resources below the pit shell be incorporated?
So what we'll probably see there is and this is reflected also in Koula and Ancien as well, is that there is an emerging underground potential at the greater Seguela project. So at least 3 of those pits have got indications of underground, and Sunbird is part of those. So you probably see the resource, the conversion to reserve being a little less than what we would normally do, but at the same time we're looking to really look at the underground potential, because we're starting to approach some pretty significant strip ratios. And so all of the pits at Seguela are phased pits. And so if we can not have to commit to the final phases, but rather take that from underground and get similar ounces but at a better margin, that makes a lot more sense. So there's a process we're just kicking off now to look at the potential for underground at Seguela. Now that potential will be a few years down the road, but we've got good underground grades. The drilling's relatively shallow. We've got good underground grades underneath at least 3 of those pits. The deepest drilling on the entire property is only 600 meters vertical, and that was at Koula. And that, I think from memory, was 3 meters at 6.5 grams. And that's wide open. We've not followed that up at all. So some of the focus for the next couple of years for the part of the exploration team there is to continue to develop the underground concept, the structural controls around it, the orientations around it, and then work our way through what is the upside potential there. Because it would be easy to see 4 or 5 years down the road from now, we might not have to commit to the final phases of a couple of the high strip pits, but rather have some declines coming in off the side of the pits, take that mineralization out, and then carry on underground further down and pick up some deeper material. All feeding high grade to the mill in sometime after year 6 perhaps.
So in other words, in this upcoming MRE, there won't be an underground resource, and
No.
there probably won't be as much conversion as or addition as thought, since you're going to explore the underground sort of venue.
Yeah, you'll probably see the start of the underground resource in the statement. Like we'll put a line around what we currently have, and that'll be the starting point. And then we'll build off that. So this is really just a matter of timing, like where we are, the snapshot when the MRE was done, that's what it looks like then. The drill rigs have carried on. We're continuing to drill the depth extensions at Ancien and at Sunbird at the moment. The guys will be looking to do additional work at Koula in the not too distant future. So, that snapshot that you see today isn't necessarily where we're going to end up.
Yeah, 30 plus prospective targets at Seguela. And in order for you to increase throughput and production at Seguela, you need more resources so you could sustain a mine life of 10 plus years. So could you rank them or rank the top targets in terms of priority for next year?
Yeah, look, this is a little bit like the Diamba Sud discussion. We have a list of highly ranked targets, and then we go and find something else that's even better. So we throw the list out and do another list. But right now, the emerging prospects that the guys are pushing hard on are Kestrel, Badior, Barana, and we're having another look at Gabbro North. So there's 4 more prospects that have good ore grade mineralization of a decent widths. And we're only 1 or 2 drill campaigns away from probably converting those to an inferred or possibly even greater. We've got of those 30 plus prospects that you talked about, we've got a solid pipeline of those coming through at the moment, which we haven't published anything on yet, so I'm a little reluctant to talk too much about those. But if you look at the track record over the last, 4.5 years of Seguela, we tend to bring things through fairly quickly. And so I'm not seeing anything that's different now than what it was 2, 3, and 4 years ago, other than we know a lot more about the mineralization and the controls on the geology there.
Since we last spoke, you have completed the acquisition of Chesser Resources. Could you summarize what exploration work has been done on Diamba Sud?
So up to now, the Chesser Resources team have performed a fair bit of regional exploration work, and they've identified quite a lot of significant mineralization, such that they were building on a PEA process when the acquisition took place earlier on this year. What we've done is, and they were naturally pausing for their rainy season anyway, which was the July to September period. We've resumed operations. We started drilling as Fortuna on October the 8th. We've got 3 rigs turning now. And so the focus for us is to really push this forward, build off the work these guys have done in the past, but to push this forward now. They've got 760,000 ounces indicated and inferred. And we're looking to grow that further to at least 1 million ounces over the next few months. That's our objective. And I believe we'll get there. The key focus right now for the drilling is to confirm the existing resource work and chase down some of the extensions that we identified in the due diligence process. And as that rolls through, then we move the rigs across to some of the less drilled off, but still very prospective areas. Gamba, the Southern Arc, there's a multitude of targets there that just need more drilling. And so we'll work through those, and with the intention that we'll progressively convert those to inferred and then ultimately to indicated, and they'll all get wrapped into an updated DFS next year or early the year after.
Excellent. So in other words, confirming the current resource and the extension of it, that is the 4 open pittable or open pits.
Yep.
Right. And the extensions, are you primarily talking at depth, or do you think those pits could be expanded also along strike?
No, the focus at the moment is more strike extension. So when we did the DD, one thing to mention here that Diamba Sud is a surprisingly structurally complex little area. At first pass, you think it's pretty straightforward, and it is. But when you get into it, there's a lot of subtleties in there that we're unpacking, and the Chesser guys had flagged earlier on as well. So what that meant, though, was that there are areas adjacent to the existing pits that have potential for mineralization to extend beyond the current designed optimization shell boundaries. And so we're testing those at the moment. So that's that second part of what we're doing now. One is the confirmation drilling of what we've got to increase the confidence around the inferred and lift it up to indicated. And then as that's rolling through, we then extend that drilling out around the margins and bring in essentially new ounces that we've not previously contemplated. We will look, it was a conversation I had earlier on today with the exploration managers there, was looking at the underground potential, because there are some quite significant high grades in there. I don't think we know enough about the continuity of them at the moment, or the controls on them, but they certainly present some pretty inviting targets for underground in the longer term. The priority now, though, is get an open cuts organised, get a project built, get it moving forward. And if you think back to what we did at Seguela, it's a very similar process at Seguela, and it will be following a very similar playbook as we ran through there over 3 or 4 years.
What kind of gold grades would be required for it to be commercially viable to have an underground operation below the open pit in Senegal?
Yeah, look, I think it's pretty typical to the rest of West Africa. You know, people are, Wassa in Ghana, for example, is mining 4.5 grams underground. You know, I'd be comfortable saying anything above 5 we could easily manage there. Senegal's a fairly mining-friendly jurisdiction. The geology looks pretty straightforward. If you can get a higher grade than that, clearly I'll be very happy. And yeah, but we haven't done any work around it yet. This is the exploration optimist in me talking about it.
You have already identified quite a few targets originally. What the targets are have the highest priority?
Yeah, look, at the moment it's a fairly straightforward process. We're focusing on Area A and Area D and Karakara, so they're the ones that already have the defined resources on them. So we want to get those, you know, wrapped up and completed. Then we're going to move on to the projects, and I said the Southern Arc. We've got Gumba Gumba up to the northwest. There's several other ones that we want to work our way through as well. So there's, again, it's a little bit like Seguela. As we start to test the existing anomalies, they tend to grow. So having a defined list to start with is fine until the first one we start drilling, and then we throw that list out and we just carry on getting the highest grades. So it's a bit of a moving feast, really. There's a lot of opportunities there for us.
And with that, I would like to move on to Yaramoko in Burkina Faso. So, I mean, you have extended mineralization to the west. They've also done some step outs in Zone 55. But could you add some color on the exploration efforts at Yaramoko and how material they could be in the grand scheme of actually adding years to the mine life with similar grades?
Yeah, so in starting off at Zone 55, the extensions out to the west, the western extensions, if you want to call it that, that's been really tremendous for us. That's allowed us to replace another year of mine life. You know, so that's easy wins for us there, and that still remains open as well. So the guys are continuing to drill as we speak. So I don't quite know where that's going to land, but you know, Yaramoko has been, or Zone 55 has been a somewhat of an enigmatic deposit over the last 8-9 years now, where you go these patches of lower grade, and then suddenly you hit a high grade bonanza area, and then it's on for young and old again. The drilling at the Western Splay is another example of that. Now, but what's interesting about this is there's much less granitic material associated with this form of mineralization. Normally we see the granite mafic contact as being a prime area. As we've headed west, we're stepping away from the granitic material, so it's more just mafic. And so the previous thinking was that we needed to have that contact to make this relevant as a favourable exploration site. What we're seeing is perhaps that's not quite as true as we thought. Perhaps as we go further away, we're actually able to find enough of a dilation in the structure to allow the veining to take place and the mineralization to drop out. So that's opening up some of that. It's testing some of the exploration concepts that we'd held on to for a few years. So that's one area that we'll be pushing hard on. The other area we've been doing a lot of drilling on is down to the south, in the southeastern corner, where we had what was called the blob. There was an area of mineralization, very high grade, which is separate to the main resource. And essentially we've put a handful of holes into the gap between those two, and we've linked that up now as well. So that's something else that'll be coming into the life of mine. And we're still to drill further down below the bottom of the mineralization as we speak. So coming back to your question about, so what does it mean for the mine life? Yaramoko's still got a relatively short mine life, so any additional ounces we find have a materially positive impact on that operation. You know, if you find another 20, 30, 40,000 ounces, there's another 4, 5, 6 months worth of mine life added straight away. And, geologically, there's no reasons why we can't see that. Compounding that, we've got a lot of work underway on the surface exploration as well. So the team is not stopping exploration. They're still looking for new prospects, new potential, near surface. Now, the near surface grades that we've seen to date will not displace the underground grades, but rather this builds up an inventory to operate at the end of the underground's life. And so we continue to work down that path as well. And also we do see some evidence of some of the higher grade veins around the property, that if one of those pops, then we may have a small underground that comes off one of those, but that's a long way down the path. We've got to find them yet.
2 months ago, you discovered the Yessi Vein at San Jose. Could you explain how you made the discovery and if the vein differs from the overall San Jose vein system?
Yeah, it's a very good little example, this one. So the Yessi Vein is named after one of the geologists there, and she was doing some infill grade control drilling and noticed at the end of the hole there was still a large amount of brecciation, which was not expected. So she let the hole run on. And anyway, cut a long story short, it turned out we had a very good interval there. So it's a great example of allowing the geologist a bit of initiative, and she took it, she ran with it. It's paid off for her. We've been drilling on that vein structure now for a couple of months, 3 months, and it's an interesting structural change. We generally see things more north-south at San Jose, and this one is trending more northwest, west-northwest. We think it's a linking structure between two other major controlling structures. So we've reorientated the rigs to test it, and we're still drilling at the moment. We've got 2 rigs turning on the property. So we'll be looking forward to seeing those results come through over the coming few months.
What are the next steps in terms of exploration of the Yessi Vein?
The first 6 or 8 weeks were just trying to understand the geometry of the vein. We were anticipating it to be north-south. It seems to be more northwest. And that meant we've had to completely modify the orientation of the drilling. Now we've got that in place, we're now looking to frame up effectively the dimensions of the vein, sort of the strike extent of it, the widths, the depth of it, so we can get a bit of a volume around it to understand what the economic potential are. And what it's also highlighting to us is the capacity for a very large mineral system like San Jose to continue to deliver new veins further outboard of where we currently are. And so this Yessi vein is part of what we've interpreted as a reedle structure, which means there's a boundary to it somewhere else over to the east, which we haven't tested for previously. So we're also looking to expand the exploration footprint out to test some of these hypothesized additional structures that are sitting out to the east and down to the south. So I think there's a few components in there. One is that we've got new mineralization, which is likely to be economic, which is very close to the mine. 2, there's expanding exploration potential around the footprint there. So, if we can convert that, it just continues to increase the life of the San Jose operation.
So in other words, you said that there were structures to the east. What is meant by that? And have you done some geophysics, soil sampling, or just seen it, or is it like right adjacent to where you have drilled at the Yessi Vein?
Yeah, we've got geophysics across a fair part of the area, and so we pick up the structures through there. But what this drilling has highlighted is it gives a bit more strength to understanding what actually are the features on the geophysics. What do they relate to? And then that's superimposed over the structural model that we work with. It ties together very neatly, and it gives us some degree of comfort that we've got a better understanding of the predictability of additional structures. So on the geophysics, we see several additional of these structures heading out to the east. And that there's no real surface expression of these, so essentially they're blind. So what it means for us is it gives a little bit more confidence to say, well, if we take the rig over to here and we do a couple of test holes, what are we actually testing for? So, and you've also got to remember that San Jose sits inside a very large regional scale structure. So the current footprint's probably about 1 kilometre from east to west, and when you think about the structures being several tens of kilometres in strike length, you've got to think that these things are probably a bit bigger than what we've currently seen. So, all in all, I'm pretty encouraged that we'll find some more out there.
In the past quarter, you made the discovery of the Yessi Vein at San Jose, which has significantly, or seems to have significantly higher grades than your reserve grade at San Jose. How will you go about accessing it and mining it? once you make that decision?
The Yessi Vein is first within our concessions and within our environmental authorizations. So it's not an area that would require permitting processes or anything. It's only, I would say right now, 200-300 meters away from existing underground infrastructure. So just to give your audience a sense, we can tunnel easily at a rate of 100 meters a month, right? So in 3 months, we could be there with our drifting or tunneling, right? So it's readily accessible within the general area of existing infrastructure. So it would be easy to integrate to production. We first need to be. Yes, it has been a very exciting discovery, but now it has to graduate into an exciting resource as well. And that's what we're doing right now.
Excellent. So in other words, it wouldn't require a significant capex investment to access the Yessi Vein.
No.
But at least it seems like it has materially higher grades than the overall San Jose deposit. When do you think that it could be brought into the mine sequence, realistically?
As I said, first we need to develop a resource, and we don't have a resource yet. We have a discovery, an exciting discovery, but we need to have do our work and develop a resource. Then we can bring in the mine planning exercise. But if we were to, be able to bring a mineable resource at Yessi, I can advance to you that it will be a matter of months before we integrate it to our infrastructure and production. It wouldn't be more than a year. It will be something measured in months.
On another positive note, so San Jose got its environmental impact authorization approved or reinstated by the Mexican Federal Administrative Court. Do you expect that to be the end of these permitting issues with Seminat, or could they appeal? Or
yes, it's unfortunate. It's unfortunate that we have had so much noise, and I say noise because the mine has never lost a day of production because all of this nonsense with the Mexican Environmental Ministry. But as you just described, we took our case to court, and the Mexican court provided a ruling in our favor that is categorical, unequivocal, completely disregarding the arguments put forward by the Ministry of Environment for canceling our permit. So the ruling reinstates the original permit, right? So the question is if the Mexican government will appeal the court ruling. I don't know. I would suspect they do. No, they have until the end of the month to file their appeal. And to the best of our knowledge, they haven't done that yet. But again, they have until the end of the month. But based on how categorical the ruling has been, I think we feel reassured that an appeal has very little chance to prosper.
Thank you. Yeah, it's great to putting these. I mean, yes, you said noise behind you, and with that, I think we could move on to Lindero. So, the leach pad phase 2 development is 13% complete. Could you add some color to its impact on the Lindero operation? And are you adding a new leach pad or?
It is an immediate zone behind the current area of stacking. It was part of the original design. The original design for the leach pad was split in 2 phases. Phase 1, which is where we are operating. And after 3-4 years of operation, we had to expand into real estate that we have there and make the second phase. And that's what we're doing. It's going to be a $50 million project. For 2024, we should expect to see a budget in the range of $35 million allocated to that, and a project that's completed towards the end of 2024. So that project is a one-time expansion, and it's going to burden the all-in sustaining cost at the mine for that year. But it is what it is. And after that, large capital projects are behind us for the life of mine.
So after 2024, it's more or less harvesting mode because the resource is very well defined.
Yes, this is a matter of an optimization exercise. Get out of this capital intensive phase at the mine. And this is our largest brownfield sustainability project in the company today. So, we just have to get over it, do the expansion. And again, it's an expansion to accommodate the reserves. It's not an expansion on throughput or mining capacity. It's just an expansion of the leach pad to accommodate reserves in the mine plan.
It's good because Lindero has been a great performer in terms of free cash flows in previous years.
Yeah, in 2022, it was our largest free cash flow generator. We operated for the year at an AISC of $1,142. So great, good margins, healthy margins. We were able, in spite of the political, economical challenges in the country, we were able to repatriate all of our funds.
Could you summarize the exploration efforts that you're planning for next year at Caylloma?
Yeah, so at Caylloma, the focus is really around the Animas vein, which is the main producing area at the moment. Animas is broadly divided into 4 dominant ore shoots 1, 2, 3, and 4, obviously. We've just concluded in November, the latest drilling program that's testing the down plunge projections of ore shoot 1 and ore shoot 3, getting some results there that are very consistent with what the model was predicting and what the geological concept was projecting. So I'm looking forward to getting those results through and getting that brought into the overall resource. And then next year, and bearing in mind, by the way, that Animas is nearly 4 kilometers in strike length that we're underground development. So it's a big footprint. So we don't drill all of it off in one go. So next year we'll continue some work. We're proposing to continue some work on ore shoots 1 and 3, and possibly a bit around ore shoots 2 as well. And it's really just getting that balance. We've got a long mine life there, so we don't need those resource ounces today. And maybe that's capital that's better spent a year or 2 down the road. But yeah, so we'll look at probably a similar tempo of exploration next year to what we have this year.
You repaid $40 million of your revolving credit facility recently, and you now have almost $250 million of debt, excluding lease liabilities. So to what level are you targeting delevering to?
The syndicated revolver, the debt facility with the banks is around $200 million as it stands today. And, we intend to take that down, probably below $100 million. Although we don't like debt, it's always good to have some level of structural debt. So you keep the relationship with the banks, you have the liquidity available. It's a revolving facility. So, we will likely always carry some level of structural debt because it adds flexibility to the business. But we would certainly look to bring it down to a level that's quite comfortable. So that's a capital allocation priority for us. Continue servicing the facility, paying it down. For example, with this $40 million payment, we're saving ourselves around $800,000 per quarter on the cost of the facility. So, we'll bring it down, right? It makes good business sense, and that's a big capital allocation priority for over the next quarters.
Thank you. And to add to that, so you're now in harvest mode with Seguela ramping up, or is ramped up rather, and in full commercial production. So, but you still have, as you outlined in our previous conversation, great opportunities in West Africa as a mid-tier gold producer. So, how are you thinking in terms of acquisitions and divestitures for, say, the next 12 months?
We are always alert on new business opportunities, not just in West Africa, but in the Americas as well, right, where we're well established. So the type of deal we would favor is one like we did with Chesser, right? Chesser presented a great value opportunity. and it's a good strategic fit. It's an advanced exploration project in a premier jurisdiction in Senegal. Our property, Diamba Sud, it's right next to some world-class mines like Cote in the portfolio of Barrick Gold, or Fekola in the portfolio of B2Gold. So we're just across the border, sharing the same geology, the same structures. And today we have a sub-million ounce deposit, about 850,000 ounces in inventory. But we have a high degree of conviction on the exploration potential of the property. And we closed the acquisition in September, and we currently are working there with 3 rigs. So those are the type of deals that are appealing to us right now over the next quarters. Transactions that don't bear a big financial commitment to the company or financial risk to the company. They do usually come with correspondingly higher geologic risk, but that's a risk we're happy to take. No, that's our business. We understand it, and we're happy to take some of those exploration geologic risks at this stage in exchange for lower financial risk.
With that, we've actually arrived at my final question, and that is, where do you envision Fortuna silver mines in 3 years?
We don't want to take Fortuna to 1,000,000 ounces, or we're not so much fixed on growth for the sake of growth. So over the next 5 years, I would say I want to see Fortuna consolidated as a mid-sized producer, operating from a base of reserves that are at assets that have a decade plus in reserves. So good predictability, meaningful production, consolidated output in the range of 500,000 ounces. That's where we are right now, but I certainly would need to work more on the longevity of the mines. An AISC, at or below industry average. So we are not far from where we want to be, right? There's still more work we need to do on the portfolio. But if you take a picture of the moment, we're doing almost 500,000 ounces a year. Next year we'll be very close to 500,000 ounces a year. That's a gold equivalent, right? On gold equivalent terms, we'll be almost at 500,000 ounces. Our cost is going to be competitive at industry average in that range. And in the portfolio, we have some mines with the longevity we want to see, and others where we still need to work, right? But we're putting the money. So, that's what I would like to see: a company that's well consolidated as a established mid-sized producer, recognized for its cost leadership, operational leadership, right?